Hey, good morning. I was just loading the coffee maker with milk. The milk thing ran out, and I dropped the milk just now. I dropped the container of milk all over the floor. So I'll be delayed a little bit. Let me handle this. Be right back. Almost done. Almost done. Sorry. Sorry. It's not my fault. Well, actually, it is my fault. I dropped the milk. Lattes being made ready. All right. Sorry. So happy day. What day is it? Oh my God, what's going on? Oh yeah. Hey, it's a Wednesday. Oh, we might have something going on later today, but we also got stuff going on now. So I propose that we rip through the calendar, see what's going on for today and tomorrow. I propose we do some technical analysis and take it from there. I'll also ask you to let me know what you want me to cover today. It could be euro dollar, it could be Bitcoin, it could be gold, it could be pound yen, whatever you want. You're the boss. I'm just a humble currency trader. So let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. But please stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. So hello, my name is Wayne McDonald. I'm a currency trader just like you. Bam! Ooh, ooh, ooh. Come on, get that hair in place. There we go, huh? All right. I'm a currency trader just like you. I have a few extra years under my belt, perhaps. Not necessarily. I made a few, but I've known some of you guys for, I think, approaching 15 years. Isn't that amazing? So I've enjoyed all this time working with you every single day. And guess what? It's still some of the best time of my days. I look forward to our webinars. I like hanging with you guys. But ultimately, the overriding goal here is for me to teach you how to put together trade plans. And for the hecklers that come in, like we've had, 3-4 hecklers yesterday, what were they doing? The hindsight stuff. But it's funny because the whole point of us meeting today in the New York session is to plan tomorrow. So like the hecklers were like, they're from a different channel or something, because we're here to talk about tomorrow, next week, next month. So today, what we'll cover, now obviously with the FOMC meeting this weekend, this afternoon, that's going to make our New York session gobbledygoo. But even with that, we are going to plan tomorrow's trades today. That's what it's about, tomorrow's trades. You're not going to log in and say, Wayne's going to put me in 5 trades today. We're going to scalp and he's going to make me a lot of money. Dude, there's a lot of stuff like that out there in the world. And right now, you might be watching on YouTube. You might be watching on Facebook. You might be watching on Twitch. And there's plenty of dudes that will do that for you. I will teach you how to plan your trades for tomorrow, next week, next month, even next year, using fundamental and technical analysis. So anyways, very cool, right? Peter says, first 6 months for me. Hey, thumbs up to that. So anyways, welcome to Forex.Today. Please like, please subscribe, please comment. All that kind of stuff's good. I have a multi-stream chat, so find your way to chat, and I will see it over there now. It used to be over here, but now it's over there, and I can't pop that chat for some reason. So anyways, I can see your chat. So, very cool. So I'll do my best to answer your questions. If you find these webinars entertaining, if you find these webinars educational, if you just like having these webinars because being a trader is lonely and it's just nice to hear someone's voice, hey, baby. You're important to me. You're special. You're my sweet baby. Then, hey, cool. Please like and subscribe. Also, pay it back. And what do I mean by that? Trader's Way is the supporter or sponsor of Forex.Today. And they want you to be educated. And they're providing education to you up front. Why are they doing this? Well, first of all, an educated trader tends to be a more successful trader that trades profitably and for years and years and years and years. And that's kind of the best client. And if you think not only best client, but most profitable client to a broker, then Trader's Way, being a foreign exchange broker, says, well, Wayne, can you reach out to a community of foreign exchange traders and teach them how to trade better so that they can actually be profitable and successful? And I'm like, you want to do that? And they're like, yeah, we want to do that. And maybe, just maybe, because of that, they earn your loyalty and respect. So even though these webinars don't cost you money, they do come with a cost. Please visit tradersway.com, open up a demo account today. Tradersway.com, open up a demo account today. So I got to, what is it, what day is it today? The 16th, right? Is it the 16th? Yeah, it's the 16th. I got to actually open this video on YouTube so I can see what's going on there. All right, cool. So I got multiple windows open. I got to figure out how to move everything around. Let's go to the live screen. I think I'm pretty much done with that. And then I move this over. All right, I can live with that. Cool. So please confirm, can you see my charts okay? Oh, wait, now I've lost my chat. Oh, you stupid, what a stupid system. Come on, Bubba. Okay, that chat's there now, and I think I can make that big. I can. Can I make it all? No. Hang on, just trying to get the system together. No, 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 no. Yes. Wow, what a dumb system. All right. So I have to look, my chart's way on my left and the chat's way on the right. I might have to switch these things and readjust the camera and stuff. But anyways, EKSO69 says, why don't you promote your referral link? I don't earn referrals. All right. Okay, cool. All right. Yeah, so this is where we left off. And one of the things we were talking about is you can be a bull in a downtrend, you just shouldn't buy. You should be a bull in an uptrend and you buy dips. So for those that were trying to think ahead, remember thinking ahead is the whole point. You are looking for levels of support in which, from your bullish point of view, you expect price to reverse from being down to then being up. This is what we talked about yesterday. Yesterday we talked about today. So now nothing's changed. We're still in the same spot. We're on a 5-minute chart, euro yen. And what we were talking about is multiple places where you could possibly buy, right? The second part of that discussion is if price bounces, in particular providing a reversal pattern at those prices, the prices you picked out in advance. I can't say that more than enough, right? Right? If you feel 124.50 is a place where there could be a bounce and you're a bull, then you get ready at those prices. You don't necessarily buy it at those prices. You get ready at that price, right? So the most common pattern here would be a double bottom, right? And then the next part of the pattern would be a higher high, higher low, which is now a 1, 2, 3, right? 1 is equal to the double bottom. 2 is equal to the higher high. 3 is equal to the higher low. And you're on the higher low. You'd buy here at this roll reversal. Okay? So you could do here left shoulder, if you want to call it that. I like the double bottom of a double bottom. How many people here remember that conversation? The double bottom of a double bottom. It might be from like a month ago. Right? The double bottom of a double bottom. Yeah, and pure is like also we used to call that a hammock because it's such a common pattern. So anyways, here's yesterday's double bottom. Here's today's double bottom. So that could be a focus for a trader. And then a higher high and higher low would be the third option, right? Now, I added a level of complexity to your trade yesterday where I said, not only would you wait for a double bottom of a double bottom, but you should wait for price to statistically have a positive rise over run. A positive slope, not a negative slope. Oh, if it was pound dollar, whatever, it doesn't matter to me. It's all the same, only the names change, right? Because don't focus on the pair, focus on the lecture here. I'm talking about how do you buy in a downtrend? That's the topic of the lecture. Okay? You see that? So whether it's pound dollar or euro yen is irrelevant. That's not the topic. Okay? All right, now Jeff says something. Here it had a positive slope, right? Yeah, you're buying, that's high, not low. Okay? So this comes out of the training course, Jeff, which I would recommend you take. Right, this is a sell. So bears already waiting to be bearish are going to sell at resistance at the London Open. I mean, it's like, of course. Okay, so now we're at the New York Open, and we're looking kind of at this. So New York might provide some down and some up. Oops. Okay, or just down, down, down. Okay, that's why you got to be very, very, very careful. Buying in a downtrend is very, very risky. You're betting against current market conditions. Okay. Oh, you're talking about this one. Yeah, then you bought it and you're fine. Jam your stop at break even, let it go. Jay, that's proprietary. JV's like, which one? That's mine. But it will be available at metatraders.com, whenever I get around to it. Right now I'm researching book clubs, features I like about book clubs, and then I'm going to build my own infrastructure. Jay, it'll only be $5, so. Right, so anyways. Okay, so anyways. So yeah, if you're calling that the London Open, fine. Okay. But it's a good idea to always remind yourself, not what you want to do, but what are the market conditions. Your job right now, the first part of your job after you do your fundamental analysis and you come up with a bias, your second job isn't to trade yet. It's to recognize the direction of the market conditions. So not only is it down, is it aggressively down? Is it conservatively down? Is it more sideways than down? Is it range bound? You see, like, are these market conditions favorable for you to buy? And ultimately, what you want to do is buy dips in an uptrend if you're a bull. So you'd have to say, well, fundamentally, you believe euro yen should go up, meaning you believe yen would weaken. And then also, under these same global market conditions, euro might strengthen. And if you don't like euro, then find something else like Aussie. Okay? Because pound and euro obviously have a relationship because of the European Union and the relationship there, but also because of Brexit and a bunch of other things. So maybe less correlated, but still macro related would be like Aussie dollar. Now, we expect New Zealand to go negative on interest rates, so maybe you just pick on Aussie, or maybe it's a CAD because you believe, so whatever. You see what I mean? You make your decisions. Okay. Question here, can you please tell us what come in market conditions? What do you mean, like how to define that? First of all, are the market conditions down or up? So I believe if you look at these market conditions, you believe this is more bearish than bullish. I don't know what you believe, but let's assume that. Therefore, you should be a bear. Technically, this is bearish on this time frame. Now, I can change time frames and it'll be different, and that's how you get your fractal geometry analysis that you have to do. But if you were a bull, you would look at this and simply say, well, this ain't bullish yet. Now you're done. And you would say, well, if the market turns bullish, where would it turn bullish? And that's all you're asking. You're setting up your trades, guys. You're setting up your future trades now. You're not buying it now per se. I mean, you could. You have permission. Okay? We picked out 124.50 because of the weekly central pivot and the monthly M2. So this is definitely a buy zone if you're a bull. Okay? Right? You see that? So now, if you are a bull, you're simply finding the time frame you like to trade. So maybe it's a 15-minute chart. Now you're waiting. Now you're waiting. Okay? And you're asking yourself very basic questions like, should you trade this as a double bottom? Okay? You see what I mean? The book, Sabatin, I wrote the book like 10 years ago. So some of the courses at FX Bootcamp are from this year, right? Like the day trading course is this year, right, Brett? So, but it all folds in. You'll see the logic is there, but. Okay. So you could look, you could be trading the touch, you could be trading the double bottom, and you're like, which one? I don't know. See, I don't know the future any more than you do. So you're making these decisions. That's called your alpha. So right now you may say, well, it's going to kick off the 21 and then come up and work its way back up. Okay. So now you might say, well, it won't really double bottom. It'll do like a 1, 2, 3 or a fib. So like you could do something like fib it. Okay. And now your logic is this. Okay. But you'll see you already had that chance. So I don't know, but you should at least know that somewhere in here around 124.50, if you were a bull, and you may not be a bull, but see, the thing is, if you're not a bull, you should be aware that this is where a bull might make a stand. This is where you might want to take some profit or adjust your stop. You see what I mean? Okay. So again, what are the logic? This is the monthly M2. This is the pivot a monthly swing trader would buy if they were going to buy the euro yen. We don't know if they're going to buy the euro yen, but if you are a bull for the month of September for the euro yen and you expect higher highs, then that would be on a monthly basis the exact price you would be looking for. 120, I don't have it on this timer, 124.65. Then down here, this is the weekly central pivot point, which is the aggressive entry for bulls. It's 124.53. So I dumb it down and we talked about 124.50. Okay, so it's very interesting that we kick off the CPP and now we're kicking off the MM2. At some point, if you're a bull, you got to get on the clue train, right? Oh, so Aisha said the stop was at 124.50. That's a terrible place for a stop because of that. Because of this is a buy zone, not a stop zone. You see what I mean? So it's one of those things, but maybe you tried, right? You tried and this one didn't work. Well, just try again. But I'm not sure where you entered and stuff like that. But your stop's supposed to be below support, right? So your decision, Aisha, would be which support? Is it monthly support? Or is it, right? Or is it weekly support? And it comes down to your trade plan. Was it a monthly swing or was it a weekly swing? Or was it a market open entry? Okay? So lots going on there. Okay? All right. What currency pair would you like me to cover next? Please let me know. Oops. Oop. Hang on. While you're typing that, I'm doing something else.
Most people and most businesses can shoot a video like this.
YouTube ads. All right. All right. I want to mini me. All right. There we go. I'll move that. Oops. No. Now what am I missing? Oh, a different page. Okay, good. Okay, let's move that there. Let's move this there. Let's move that there. And then let's move this here. Okay. All right. Maybe that's how I do it from now on. All right. All right, that might work. Cool. All right. Let's see what you said. Euro dollar. Rand. Oh, you entered in last week's buy zone. Oh, how unlucky. Yeah. Well, then you did the right thing, though, Aisha. USD Swiss franc, pound dollar, euro dollar, ZAR, gold, ZAR. Never even looked at ZAR. Rand is beautiful. South Africa Rand. All right, so yeah, okay, so dollar pairs, some gold and exotics. Okay, I can do that for you. So here it is, guys. Here it is. I want to watch this for a second. Oh, 8:30. Oh, I forgot to bring up the news. Let's pull up tradethenews.com. Man, I got to get yet another window open.
You're listening to Trade the News.
Advanced retail sales. Let me get the retail sales number. Well, it's an up number, and they're saying it's less than expected, which is funny because I don't know who makes up that stupid expected number, and they're almost always wrong. So anyways, it's not as good as we were hoping, I think is what it is. Okay? So that's why you get a little down here. Okay? Mohammed lost money on Rand. Yeah, it happens, dude. Happens. We have a mantra at Swing Trading Group. We call it 60% of the time, it works every time. Maybe it's even, that was from the day trading group. Sorry. 60% of the time, it works every time. Okay? All right. La 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 la. By the way, is anyone on
The dollar index holding
a different platform besides YouTube? Is anyone on
to track low as well ahead of the OFAC
any 12-year-olds watching on
following that
Twitch?
advanced retail sales figures that were below expectations. The U.S. long bond is up more than half a point. The 10-year up 6 ticks, and the yield back below 66 basis points, down 2 basis points, and the 2 10-year spread narrowing by 1 1/3 basis points to 52.5 in the wake of the retail sales data.
So check that out. Oil up 2%. So anyways, not very good numbers out of Canada, but oil's up, so that's going to be good for Canada. Let's talk about the Fed meeting. I was thinking about doing a special webinar today where we gather to watch the Fed meeting together. No, Salado Club, that's wrong. It says, sorry to digress, we know currency like US dollar, if they cut interest rates, it falls. Wrong. You're wrong there. No, it does not fall. If the Fed cuts interest rates, the US dollar does not fall. That's wrong. Peter says on YouTube, well, either that or we can meet at your house, Pete. You got some good salsa? We make our own salsa at the McDonald Manor. We grow all our own peppers. It's pretty good, actually, to be honest. Party of Pete's. JV! Right.
China, Lee saying that China will keep the policy timely and reasonable.
Yeah, well, how about we could just do it on Facebook. Let's just do it on Facebook. Let's do like a Facebook only thing. Oh, that's interesting. And I ran. All right, so let's turn that off for, right? By the way, what is FIC? Oh, you got the Hennessy? Nice. So I think on Facebook, it's Facebook live.forex.today. See, I don't get it. Where do they put this? So we have 800 views, but where does it post the actual live stream? I don't understand this system. It was really weird. Facebook was really weird. Like, you got to set this up, and then you got to set that up. But, oh, I have to view it as a visitor. But it was, oh, there it is. Cool. There we are live. Oh, my God. Oh, look at that. All right, cool. All right, so, yeah, I see public view. Cool. So, this is us right now, real time. All right, why don't we meet over here, facebook.com/live.forex.today. I can't type it in for you, unfortunately. How about that for you Facebookers? So we'll see who Facebooks. That's weird. There we go. What do you think? I'm not a Facebook dude, so, but if you guys are, and I know some people are, my son and I were talking about dopamine. I'm like, Facebook's just dopamine. If you like looking at pictures of your neighbors' kids and them on vacation in the Caribbean, and you're like, look at my neighbor and his kids in the Caribbean. Like, why do you care, right? I don't get Facebook. But hey, if it's dopamine, nice injection of dopamine into the brain. So anyways, very interesting. So if you want to meet there, then we can meet there. How about that? I don't have a Facebook, and then you can't join. Morena says many people don't use Facebook. Well, we'll find out. We'll find out who does. That's why you want to test it, right, Morena? Yeah. All right, so let's move on to the next thing. Wow, look at that. Okay. I'm going to move on to the exotics. Let's see if there's more news-related stuff going on in the background. This might be related to China, this move here. Yeah, tiptoeing into that trade war is going to be bad for risk on, because that's definitely risk off. So very interesting. All right, so let's move on to South African Rand and see how it's doing. Rand won't be doing well in a risk off, trade war scenario. So let's do that next. Okay. All right. So here we are. Here's the peso trade, by the way. Do you guys remember that one? It's doing well, isn't it? Look how beautiful that is. Okay. Once again, not hindsight. This is the one we were talking about, how to stay with the trend, but also recognize when you're, above the mean and projecting to the bottom of the mean, right? And if anything, I think the M has increased, right? There's more, actually decreased, I guess. Sorry. I guess it's technically, I don't know why I even thought about it that way, but it's one of those things. So there's more or less. There's more negative. Right? There's more negative. There's more negative than ever before. So anyways. Daniel, I believe it's related to trade war with China. So that won't be good for moves in here. Although currently this is working very well. This is a high yield trade. Let me show you the stats here. USD Mexican peso, because the interest rate in the United States is 0.25. The interest rate in Mexico is higher. So if you were short, you're carry trading and you are picking up. And I rend. Okay. 9.6. Okay. So here's what you do. In a scenario where you have a sell, and you can see last week's sell, this week's front run, Friday front run, all that kind of stuff. And I know some of you guys are building exotic currency portfolios the way I've taught you, which is great. And so when you tiptoe into something like this, the best way to figure out how much money you're going to make is take a trade. Simple enough, right? So you place a trade, and at the end of the day, you'll earn some sort of income, and that's called swap. It's interest rate, okay? So but the interesting thing, like a bond, you get paid 4 times a year. You collect some interest. In Forex, you get paid every single day, even Saturday and Sunday. But you don't get paid on Saturday and Sunday. You get paid for Saturday and Sunday on Wednesday. But you do get paid for it. So every day you get some income put into your account. Okay. And let's say you make a trade and it won't be $9, but let's say it's 50 cents a day, but you've invested $100, right? So now you're 10,000 US dollars. You borrow 10,000 US dollars. And then you convert those into Mexican pesos, and Mexico pays you for loaning them money. You get it? So you borrow from Trader's Way $10,000. You have to put up $100 in collateral, or whatever it is. Let's just keep it simple. And for $100 of collateral, you're allowed to trade or invest 10,000 US dollars. So then you invest 10,000 US dollars into Mexico, and Mexico pays you interest on the loan you gave it Mexico. This is what we do, guys. We're international financiers. Okay, you get it? So you put up some collateral to borrow some cash. Then you invest the cash into Mexico. Mexico thanks you by paying an income. Now, of course, the Mexican peso can also appreciate in value. That's asset appreciation. What we're talking about is simple income. This is like collecting rent. We're not talking about owning an apartment building. We're just talking about the collecting rent aspect of owning an apartment building. Okay? So you collect rent from Mexico every single day. Okay? And let's say for $100, you find out it's like 50 cents a day or 35 cents a day. But you got to multiply that to make it annual. Right? So if you're collecting 50 cents a day, it's like more than $150 a year, right? Right? Let's say it's $180 a year. Now, think about it. You only have $100 of your cash invested. What's your internal rate of return just on the income? Right? You put up 100 and you're collecting 180 and you get your $100 back. Because remember, if you get knocked out of the trade, you get your money back, right? Because you stop at break even. So you get your money back. That's not even at risk anymore once you get it to break even. And now every single day you collect income. And if it's $180 a year guaranteed as long as your trade's open, now look at your internal rate of return on your cash invested. Hundreds of percent, right? Now you're like, oh, wait, snap, that's pretty good. Yeah, but of course, if you're in this Mexican peso trade short for a year, right? Then you've made all those pips, and the pips are worth way, way, way more. And that's how you make like 1,000% return on investment. How many times have you heard like George Soros and what's his name? Roger? Is it Roger? No, Roger. No, Rogers. Ken Rogers? Jim Rogers. Jim Rogers at the Quantum Fund, right? Jim Rogers and George Soros, and they would make thousands of percent per year. How do they do that? First of all, you measure it using internal rate of return. That's one way. Right? Leverage helps too. Okay? All right. So anyways, you need this to be going down for you to be doing this carry trade. And you can see dollar was strong for many years and peso was weak for many years. So it hasn't been a good trade for a while. But boy, oh boy, oh boy, oh boy. Okay? It could be. We just need the U.S. to do more business with Mexico. The problem, and like right now, who was it? Prime Minister Lee, who just said something in the news. Let me bring it up. Premier Lee reiterates the stance to keep economic policy both timely and reasonable. I thought he had said something about Trump. Maybe I was wrong there. But anyways, if the Trump administration creates a trade war, which they've done in the past, right, for political reasons, and it makes sense for him to do it now, actually, then that's bad for these emerging markets. All right, like Mexico needs to do more business with the United States, not less. Right? Turkey has its own problem because it doesn't export anything anymore anyways. So they've just driven, they built a ship and then crashed it into an iceberg. Unfortunately, I think they did it on purpose, so for no logical reason. Emotional reasons, maybe. So anyway, so lira has been taken away from us. Thank you, Erdogan. So now we got Rand, and we want South Africa to do to export more. Okay? We want South Africa to export more. Will that happen in a good economy, good global economy, or will that happen in a bad global economy? Well, if the economy is good, then South Africa has a chance to export more. You see what I mean? If the economy is good globally, then people globally, companies globally, countries globally will have the capacity or capability or need to buy stuff. It's consumption. Yeah, Daniel says the economy sucks now, yeah, but that's not what we're interested in now. We're interested in the near future. So this actually, we're talking about, when we're talking about global GDP, okay, let's do it this way. When we're talking about global GDP, so GDP equals C plus, right? Consumption plus investment plus government spending plus exports minus imports, right? And we did exports minus imports, was it yesterday? I think so, right? So now we're focused on this, consumption. And maybe a little bit, no, it won't be investment, not really government spending. So in this case, if globally consumption goes up, consumption for everything goes up. It's not necessarily just consumption of silver. No, it would be silver, gold, t-shirts, wine, everything. Okay? So if consumption goes up in one place, okay, then now we got to rearrange that. Somewhere else, exports go up. Because if consumption goes up, there'll be domestic and there'll be foreign. And foreign is similar to, or is the same as imports, M. So if M goes up because of consumption going up, okay, then to the rate that the consumption of foreign goods and services go up, exports must also go up the same as this. Okay? So now you would go consumption domestic. Oh, wait. No, I'd have to think about this now. I was going to say consumption domestic plus consumption foreign is equal to X. Of course, that's not true. So it's just, let's do it this way. Oop, that's not the eraser. Let's do it this way. As consumption goes up, the consumption of foreign goods globally will equal the export, well, in this case, import. Let's do it that. This eraser's not working. Is equal to imports. Well, right? It's the same thing. So as consumption globally goes up, now think of it as every country individually. Consumption of foreign goods in Canada, the consumption of foreign goods in the United States, the consumption for literally for every country means they're importing, which is somebody else's export. And South Africa exports. So their X goes up. What happens to the ZAR when their exports go up? The ZAR goes up. The rand goes up. Okay? Because they say, okay, we'll give you gold and diamonds. We don't have any trees. We don't have any lumber. We have to import it from the United States. But if you want some of the stuff we do happen to have, okay, then you're going to have to buy some rand and pay us in rand. Right. Now, Mike brings up a good point. We know that. Remember, though, GDP being reported, GDP, is one of the biggest lagging indicators you have, because you have to add up all the receipts of the entire economy, because your spending is someone else's income. That's the other way of looking at it. If a country spends money on foreign goods, it's the exporter's income. Okay? So, but GDP is always like last quarter. Like, who cares? Dude, seriously. Obviously, COVID-19 impacted South African exports. Of course. This is not what we're trading. You need to calculate, to be a successful foreign exchange trader on the long run, you need to calculate your own GDP forward. This is why we look at things like consumption, right? We can't really look at business investment, but we can look at business activity and anticipate investment, right? And, government spending obviously went up because of COVID, right? And then we are tracking imports and exports. So not long ago, maybe it was the live trading group. I guess it was the Thursday group. We went through about 8 different very little known, hidden little government agencies inside the US government that track things like exports and imports. Why? We're essentially building our own GDP models. We're not interested in what happened last quarter. Who cares? Obviously, GDP was down in South Africa during COVID and during the COVID shutdown. I mean, of course. We're not even interested in GDP now because this is already played out. We're trying to think about what GDP is going to be, the like Q4 GDP. And Q4 GDP won't even be reported until March. March! It's September! So, like, who gives a, right? Who gives a double crappuccino about the old GDP? We're not even interested now because we're already trading now. And now we planned out earlier. We already did now. See, look at this, guys. Here's what we did last week. I have this set for you. Up, down. There you go. The whole week was planned. Done. Okay? So we're not even interested in now, this week or this month. We already have those plans put together. Okay? How many people here, here's a question, I want you to answer it. How many people here know for the month of September, how many people knew in August if they were trading Rand? Now, you might not trade Rand, South African Rand, but you know what it means. It's a commodity currency. It's a risk-on currency. So even if you don't trade it, okay? How many people here knew in August what they would be doing with South African Rand versus US dollar, whether you are a bull or a bear? How many people knew that at least a month in advance? At least a month ago, if you were trading this, if I forced you to trade it, you knew what direction you'd be trading it. You wouldn't be saying like, Wayne, do I buy it? Do I sell it? What's going on? I don't know anything about South Africa. No, if I forced you, you're trading Rand now. Here's $1 million, but you can only trade USD Rand. How many people here knew at least a month in advance whether they'd be buyers or sellers? Okay? That's the point. So, like, last quarter's GDP, irrelevant. It's irrelevant. Irrelevant. Dead news. Old news. Past news. Not interested. What about Rand? What about GDP right now in this quarter? We're not interested in that either. Because, like I said, we've already put those plans together. We are already trading now, the GDP now, which will be reported in 2 or 3 months. So what are we interested in now then? 2 to 3 months from now. which won't be even reported for 6 months. And by the time GDP comes out, we've already played it. Remember, news, write this down. News is not fundamentals. Okay? News releases, right? That's not fundamental analysis. Okay? Cool. So the thing is, if you don't know, and now your fellow comrades here do know, your contemporaries do know, and you're like, wait, I don't know that, but these guys do know that, then now you should say, why don't I know that? Okay? Cool. So here we go. Let's take a look at that. So what was the interest? It was 9.16 on peso, right? Let's compare South African rand with Mexican peso. 56! 58! 58! What? 58! Now, what does that translate to? Well, it's hard to translate that because you don't know what a rand is worth. Okay, I'll never forget checking out of my hotel room in Johannesburg, and the people in front of me are just paying their bill, and they get this giant bill, and one guy, he picks up the bill, shows his buddy standing next to him, and the buddy's just playing on the phone, and he's like, hey, look at this, and he looks at it, and it's a huge number, and he laughs, and he's like, it's only rand. And they start laughing. These are local South Africans, I think. And they're just laughing. They're like, yeah, whatever. So you don't know what a rand is worth. So if you sold this on, Friday/Monday, you would, every day you'd get a little bit of money put in your account. And again, you might only have $100 risked on this, but you might be earning 80 cents a day. Right? And you're like, that's nothing. Yeah, on the short term. But if you're making $250 a year on a $100 investment, would you put $1 billion on it? Right? Think of it that way. Think of the guys, so at FX Bootcamp YouTube channel on Sunday, we did Off the Charts with Wayne McDonald. And one of the things we were talking about or reviewing was a hedge fund that invests into large cap stocks, and they have $7 billion under management. Right? And they make like, what was it, 3% a year? 3% a year. And they have $7 billion. They only own 50 stocks. They're like basically a mutual fund for billionaires, and they don't make any money. But now they make 70 million cash every year just in management fees. Just amazing, right? Now, how'd you like to just have stops at break even and be guaranteed 7% a year? And that's with no leverage at all, right? So imagine you're earning an internal rate of return of like 300% a year. So now it's just like, you know what you want to do. The rest is deploying capital. Okay? It's just, this part sucks. Okay, there's your COVID. Here's your anti-COVID. Okay. So one of the things we talked about at that webinar, Off the Charts with Wayne McDonald, we talked about intrinsic value. And you're looking for the market to be wrong because you have price and you have value. Okay. Now, some people will say for like valuing a company, you could say the value of a company is the price per share times the number of shares. That's not right. That's the market cap. That's not the value, or right? So what you would do is there are lots of models to predict what the price is. So for example, you could run a CAPM on it. And that tries to predict the value or the price of a company based on things like market beta, and it tries to kind of look forward a little bit. You could use discounted cash flows with time value of money into it. So you could do, but whatever, you can come up with lots of different models, right? You could do discounted cash flow modeling and stuff, and you would come up to the actual value. But price could be price and value are not the same thing, and you need to wait for the price to be wrong where it's too cheap, not too expensive. A stock, especially in today's market, a stock is way overvalued. I think you know that. We're at all-time highs, right? So when you are buying a stock right now in the US stock market, by definition, you are paying too much. Potentially more than anyone has ever paid for that same stock. And real estate gets like that too. To buy real estate, you have to pay more than anyone else was willing to pay at that time. Think about it. By definition, you are the highest bidder. You paid too much. So what we need to do is say, when is the price lower than the value? Okay. Now that's why these guys made attracted $7 billion. Turns out their granddaddy and their daddy ran money, so it's probably all their daddy's money, their daddy's friends' money, daddy's clients' money. Daddy retired and gave his boys $7 billion in clients. And by the way, they probably pay 60% of that. That's 70 million. 60% of it goes to dad, and he doesn't do anything because he gave him his book. So anyways, so now they only make 30 million a year. That's only 15 million each. Anyways, so in a situation like this, when there's blood in the streets, South African rand may be undervalued. Another way of saying it is everyone went to the US dollar for safety, and the US dollar was overvalued. And because it became overvalued and the purchasing power of the dollar went up, that US dollar could just buy more rand. So you can look at it as a strong dollar or a weak rand. It's your call. That's where you do fundamentals. So now we go back to like the South African economy, and the South African economy is bad. Well, we always known that, right? So that hasn't changed. The troubles of South Africa hasn't changed. The risk profile of South Africa really hasn't changed. The thing is, what's happening with the dollar? Okay? And as global macro improves, like I just showed you, what happens? Consumption goes up. In particular, consumption of foreign goods goes up, which means their imports go up, which means someone else's exports go up. And South Africa is an exporting nation, which means if their exports go up, ZAR goes up. And if at the same time global macro is good, Americans buy more stuff from South Africa, which means the quantity of dollar in the interbanking system goes up, and the value, the purchasing power of that dollar goes down. So at the same thing that makes rand goes up makes dollar go down. Holy schnicker-schnacker! That just happened. Oh my God! Yeah. I know, right? Okay, let's do one more currency. What would you like me to cover next? Would you like Bitcoin? Let's do it this way. Let's do a vote. Do you want me to do Bitcoin next or gold next? Please let me know. Gold or Bitcoin? XAU or BTC? Let me hear your voice. Let me clear my throat. Kick it over here, baby pop. And let all the fly skimmers feel the beat. Grab. BTC, both. Mahai can't follow instructions. Boy, if you were in school, you would be punished for a response like that. Okay, BTC, gold, 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 XAU, gold, gold. Am I into stocks? Well, I have a wealth management team that buys stocks and mutual funds for me. But do you guys remember? When was it? A month ago, I was telling you how we were talking about taxes, right? We were talking about taxes. And I said one of the cool things about forming a Forex business and getting trader tax status is your taxes go down and you can write off expenses and stuff. But then I said you could set up a retirement account for yourself, right? And I said the cool thing about that is because your company, not you by the way, your company sets up a retirement account. Like think of it as a 401k for yourself, and your company is the one putting the money. The cool thing is, okay, so let's say, okay, so you have your trading income. Your FX trading income, okay? Or profit. Let's do profit. Let's say, okay, profit. Let's say you made $200,000, okay? If you had a job, and by the way, we'll do gold after this. If you had a job, what's your tax rate? 40%, right? So you pay $80,000 in taxes, and you're left with $120. So you made $200, but you're living on 10 grand a month. Okay. All right. In Forex, you make 200 grand. Okay. Now you write off your expenses. You're traveling to a Forex conference, buying your computers, paying for your super high-speed internet access and all that kind of stuff, right? So I'll just pick another number. Let's say you write off, what should we say? I don't know what numbers for that. You write off $1,000 a month, right? So let's say 10,000. So you're down to 190 that you made. Okay, I'm not thinking about this ahead, so the math's not going to be. Okay, now you didn't make that 10K. You bought your trading computer. You bought your monitor. You paid for the Wall Street Journal. You paid for your gigaspeed internet access. Okay, your laptop with triple screens, all business expenses. You see where I'm going with this? So I'm just going to say it's 10 grand. It could be 20 grand. I don't know what you do. Okay, so whatever. But the thing is, you bought all that, and it's treated like you never had the money. You see, you have all these assets now, but it's like you never had the money, so you don't pay taxes on it. Now, if you were not a business, you spent the 10 grand and you lost the 10 grand, but you have your cash went down, but your assets went up, but the value of your new laptop is like nearly zero, right? And it'll be zero next year. So you basically burn the money. This one, the government says, no, that's not consumption, that's investment. Ah, see how I brought in GDP? All right, so the next thing is, you are going to, it's actually $57,000 a year. Let's say it's $60,000. Okay? So now you minus 60,000 and you have 30K. You know, let's change the numbers here. Let's change the numbers just so it works out nice. All right, so you have 20,000 in expenses, right? So you get 20K in expenses. You never had the money. But if you bought all this stuff for your trading business, you have all these expenses, you go to a conference once a year, you drop 10K, it's a business expense, whatever. So now you have 180, and then you put 60,000 aside, so now you have 120. Who's better off? Who's richer? It's actually wealth. Who's wealthier? By the way, they're not the same, right? There's two things missing. Yeah. Okay. So now you're paying 40% of 120, not 40% of 200. Okay? But what's the other piece that's missing? Yeah, Jeff, that's what a corporation is. Okay? By the way, you're not taxed at 40%. Okay? So I'm sure your taxes will be more like 20%. Because you're not, right? It's not really personal. Your personal taxes are going to be 15%, and then there's some other, the other, right? So you're going to pay, once it all comes out, you're going to pay 20% on the, right? So now your taxes are 20, let's say 25K. Okay? So you're like, well, Wayne, you're only bringing home 95,000. So who's better off? Anyone missing it? Anyone see it? There's one major component here missing. Type in a question mark if you don't know. I want to know that you're listening, or right? By the way, I'm not your lawyer, I'm not your accountant. The 60. Ha ha ha! Wee! What? So how am I going to fit this in? I got to change colors. You put in $60,000 before you paid taxes. You never even made the 60K, according to the government. Yeah, where did I put that? So I have $60,000 every year that I didn't pay taxes on, and I can now invest that money into the stock market or have someone else invest it into the stock market, and it grows tax-free until I take profit when I retire. But even then, now I'm paying long-term capital gains, which is only 15%, I think, not 40%. So, yes, you pay yourself before you pay the government. This idiot with a job paid the government before he paid himself. What a loser. So what you do is, first of all, you write off expenses. You buy everything you need to be a good foreign exchange trader. Buy yourself the best. Then what? Then you pay yourself tax-free. No, tax deferred. And when you do, instead of paying 40% taxes like that idiot, you're going to pay 15%. But you're going to pay 15% 30 years from now. And what happens to the 60K? How much is it going to be worth 10 years from now? 120. How much is it going to be worth 20 years from now? 300. Per year. Because this one will keep going up. It'll keep compounding year after 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 year. So if you want to quantify it on the short run, my net worth is $155,000 for the year, and this idiot with the job is only worth $120,000, and he leases his cars and spends 4 hours or 2 hours a day commuting. I work at home, loving life, living large. My net worth in year one for this year is $155,000. It went up $155,000, my 95 plus my 60. But then if you look forward in 20 years, I made $400,000 in 2020. And I have to pay 15% taxes when I take out the 300K. But keep in mind, it's every year. Because in 2021, I'll do the same. And in 2022, I'll do the same. Another 60K, another 60K, another 60K. It's actually 57,000 is the maximum. 57,000, 57,000, 57,000. Okay? And you can put it in an account and you can make your own investment decisions. I'm not actually sure if you can trade Forex with it. I'm not even really interested in that because I already trade Forex. I made the money with Forex, so I need to sort of hedge and all that kind of stuff. So it goes into the stock market. Okay? Now, who's richer at retirement? In 25 years, who's got more saved? Is this dude saving $60,000 a year? He's only bringing home 120. There's no way this guy saves 50% of his money. What do most people save? 10? Do you know anyone that saves 20% of their income a year? They might give 20% to their church. Do you know anyone saving 20, 30, 40%? Dude, you're saving 300% of your income over time per year. A-Rod says if you make $1 million, Uncle Sam takes almost half. It's not true. If you make $1 million a year with a job, that might be true, but nobody makes $1 million a year from a job. Okay? Even if you're CEO, the way you do it is you pay yourself $1 salary, and then you take out $10 million in a distribution scenario, like cashing out a stock option. And then you pay 15% on your long-term capital gains on your options. Nobody earns $1 million a year as a job. It doesn't happen. Now, you might own a business like I just said, okay? And you might pay yourself a small salary, right? And that you pay you 40% on your salary, but then you take a distribution, which means at the end of the year, you have retained earnings, right? You have your retained earnings, right? Which is different then, right? And you say, okay, you're going to pay yourself a distribution by taking out half of your retained earnings, and that's 15%. So no one pays themselves a salary. It's stupid. Poor people earn a salary. Okay? Rich people don't earn salaries. They own stuff. They have capital gains. They have distributions. They own trust accounts. They own LLCs. They own businesses. They own shares of businesses. They own partnerships. They don't earn salaries. Okay? So anyways, and then, by the way, that's how you make $1 million a year. You own stuff. So anyways, so now you're making $400,000 a year times the number of years you worked, right? And now you're worth way more than the loser with a job who makes $200K, and you're right, and you're a boss and you make $200K, and when you retire on filet mignon and champagne, and this person is eating cat food and works at Starbucks when he's 73 years old because he only made $200,000 a year, stuck in poverty and having a poverty mind, right? Now, I grew up in poverty. I grew up with like people with jobs. Like I grew up poor, actually, so I'm being a little silly, but I never had a poverty mind. Okay? Winner, loser. Job, trader. Okay? I never had a poverty mind. Never did. I grew up poor and I had multiple jobs. Multiple jobs. My whole entire life had multiple jobs. I had 2 paper routes and I worked hockey games at night. And I'm like underage. I'm like 12 doing that. 12. I don't know how I got the job at the hockey games, but my first job was to walk up and down the stairs selling Coke. Coca-Cola, get your ice cold Coke. And I sold so much Coke, I was like Pablo Escobar. I sold more Coke than Pablo Escobar. So they're like, damn, how do you do that? So they put me in charge of all the other kids that would walk the stands too. Cold Coke, right? So now I'm in charge. My first management job was selling Coca-Cola at games because I can get them to sell. So they would show up and I would already have, like, so you'd carry 12 Cokes in a basket type thing. They would come down, they would pay me the money that they collected. I'd give them more Coke and then I'd give them money back, right? So then we sold so much of that I trained some other kid to take over that job. And they, get this, I'm 12, by the way. I'm not even legally old enough to work in Canada. Okay, I'm working at the Saskatoon Blades Hockey Arena. Amazing. They put me in charge of a booth that sold coffee. You had large coffees and you had small coffees, right? One was 80 cents, another one was $1.11. Like the weirdest math ever, right? Whatever it was. And all of a sudden, right in the intermission between the first period and second period, like hundreds of people would come down, stand in front of my booth, and handing me cash, and I'm handing them coffee, and I'm doing the math, handling the money. Hundreds and hundreds and hundreds and hundreds and hundreds and hundreds of dollars in the matter of 18 minutes. And then everyone goes back. And then we do it between the second and third. Like insane for a 12-year-old. Plus I woke up at 5 o'clock in the morning to deliver newspapers. And I had to collect my own money and sell and deliver the newspapers. Newspapers have to be delivered by before 7 a.m. They have to be folded in such a way that goes into the mailbox. In America, you throw it. What a stupid thing. In Canada, you put it in the mailbox. Okay, it has to be done by 7 a.m. Do you know what the weather is like in Saskatchewan in February at 5 o'clock in the morning? It's negative 30 Celsius. Negative 30 Celsius. I'm 12. I got 2 paper routes. Why? because I was poor. Poor. Poor, man, poor. But I was a hustler. Never had a poverty mind. Because having a paper route was like owning a business. So I want 2 businesses. And you put me in charge of selling, all of a sudden, boom, I'm running a small business, collecting money, right? That always had that mind. And so right? But I never got paid by the hour that way. Like they didn't pay me by the hour to just sell coffee. They didn't pay me by the hour to sell Coca-Cola. They don't pay you by the hour to sell newspapers. You want more money? You knock on doors, you sell more newspapers, and then you got to collect the money. It was ridiculous. I had to go back and collect money. You owe me $8 for the month. Okay, like amazing. But these are jobs, right? So some of you guys probably have the exact same mind. The exact same mind. Where you might have come from nothing, but you don't think that way. It doesn't compute with you. You're almost from another planet. People look at you different. People expect you different things from you. Right? That's why having some knowledge, though, is helpful, because I found what you do is you're always pushing through a brick wall. You're always doing it the hard way because you don't know any other way. So if someone comes along and says, there are 2 people on this planet, one that has a job that earns $200,000 a year, and the other one's a Forex trader that earns $200,000 a year. One of them retires filthy, stinking rich, and the other one works at Starbucks when they're 73 years old because they get health insurance, they get a little bit of money, and plus now they get to eat yesterday's unsold muffins and a free cup of coffee. And you're like, oh my God, my life is so good. I work at Starbucks 20 hours a week. I get some money. I get a free muffin every morning and a nice Pike's coffee. Like, I'm living the dream. I'm living the dream. And the Forex trader's on his yacht going, I want a triple grande soy latte. Hey, Jeeves, go get me a triple grande soy latte. And hurry. Right? There's the difference. I promised you gold, so let's do gold and then we're out. Gold. 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 Bull gold. Where is it? I guess I got it under commodities. That makes sense. You are not alone. All right, so there's gold. Hey, where's Mr. Hindsight? What happened to Wayne, Mr. Hindsight McDonald? Where'd that loser go? Look at the plan, bro. Here's what he was crying about, that big red candle. Cool. Still looks like it's going up to me. Okay. So when you put this together, the part that's most interesting, and this is price action, by the way. Okay. We call this a role reversal, standard operating procedure. Okay. Now, the concerning part is there's a high here, which wasn't a breach. We're still not doing it. So I want this to go up here. It needs to do this. Like, I don't want to do another trip. I don't want to do another round trip. But we're definitely hesitating here on a central pivot, which is where bears would attack this, right? Marina says I booted him out. I didn't boot anybody out. Anyways. Hey, Rod says, have you read Think and Grow Rich? Is that the... No, I don't read books like that. But I was at my kid's Science Olympiad event, and I think that one they both won state championship, but in 2 different events, which is amazing, right? State champions. both my kids have been state champions doing like building rockets and building bridges, doing physical and industrial engineering. Pretty amazing. So anyways, I remember one time I was sitting there, and I think the only book I could buy at a Starbucks was Rich Dad Poor Dad, was it? And it's like a parable. It's like reading, I don't know. Anyways, I think those books were helpful if you don't have the mindset already. Oh, Maida did. Thank you, Maida. Like, no one ever had to tell me. First of all, I didn't have a dad at home, right? And my mom worked all the time. So I always had to take care of myself. And did I know about, no, I didn't know any of that stuff. So I suppose if those books are interesting if you were not born an entrepreneur, but I can't turn it off. Like, being an entrepreneur to me is both a blessing and a curse. But I never read a book about being an entrepreneur, or, and I chuckle when I see kids that like, dude, I just spent 5 years at Harvard. There's a lot of 20-year-olds, and they're going to school to learn how to be an entrepreneur. And it's to me, it's odd. It's kind of odd. I don't know. I don't know what that means, right? So so for me, I find the books frustrating, but interesting. I like the part that I liked was it sort of was a parable. Like, it wasn't a how-to book. It was just literally a story. And there's lots of truth in those stories, so whatever. So I'm not poo-pooing it. It's just not my kind of thing. Like, I think the best, or not, the next book is what I wanted to say. The next book I'm going to write is likely going to teach traders on how to start a hedge fund. And it's technical. To me, all this is technical. Not technical analysis, but like, how do you, first of all, what is a hedge fund? And what are all the different types of hedge funds, and what do they do? Because you can't start a hedge fund and not know who your competition is, right? So you need to know what an arbitrage hedge fund is, right? A neutral hedge fund, all these, whatever. We'll break it all down. So you got to know all of that kind of stuff. And know the differences in the different legal structures, and the difference between the contracts that clients sign, and the reasons all this kind of stuff. And then you'd say, okay, so now you want to start let's say a Forex fund. What does that mean? Is it a managed futures program? Is it a pool? Is it truly a hedge fund? And what are those things? And then how do you approach a lawyer? And all that kind of stuff, right? And then once you got your legal structure all set up, and obviously you already have your track record of success that you can use, right? How, so it's not a story, but how do you raise money? How do you find people? What's your elevator pitch? What's your one pager like? What's your disclosure document like? Your disaster recovery plan, your PowerPoint deck, all this kind of stuff. Like, all of it. Like, how do you roll it out? Like, how do you literally, what is in your PowerPoint deck? Okay? So that would be, the entrepreneurial side of being a trader, because what we do now is teach, you're learning how to be a profitable trader. So the next thing is now you have to learn how to run a small business. And you may have never done that before. Right? Now you need to raise lots of money from strangers, not just friends, families, and fools, but from strangers. So how do you find all of them? And then how do you put it all together? And then once you have that, now you have money, assets under management. But now what about your tax attorney? What about your tax structure? What about your management fees and your performance fees and soft dollars versus hard dollars, right? What about your accountants? What about your compliance team? What about being regulated, right? Right? What about what you can market and how you can't market, how you can sell, how you can't sell? And all of a sudden you're like, oh my God. And that on top of that, you're also a profitable trader. And all of a sudden, like, whoa, dude, totally different skill sets, right? Yeah. So that would be my next step if I were me. All right. So here's our gold. Buy, 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 buy. And what I'm hoping for now is the up, 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 down, down, up, 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 up. Oh my God, that's future. That's future. Okay? If it doesn't give us the up, up, then we have a problem, because now we've established the role reversal. What used to be resistance is now support, but now we're stuck at resistance. And if we don't break it, the resistance won't become support. So now we're sort of in not a good situation where we have consolidation, which increases the downside risk. So, right? What we want, or at least what I've drawn here, right, is this. Okay? And by the way, we started this process last week. Okay? Thursday, Friday? No. Wednesday, Thursday, Friday, Monday, Tuesday. So Friday's in here. Okay. Anyway, so this is just a follow-up to last week. And what we're hoping for is up here. So there's your gold. So maybe leave comments under the recording of this video and let me know your thoughts on that book. Is that something that you're looking for? Is that something that you're interested in? Would you read it? It would take me a long time to write it, obviously. It'd be a very intense book. But I've done it in venture capital. Not written the book, but I've done a lot of that in venture capital, and I've done a lot of that in Forex trading as well. Okay. Oh, it's the one I'm going to write, Brian. So anyways, thank you for being part of the community, whether you're on YouTube, Twitch, or Facebook. Thank you for being part of the Forex.Today community. Also, we're going to do the FOMC meeting at facebook.com/live.forex.today. I can't type it in because with the multi-stream, I can only receive messages. I can't send them. So I think I still have the page open though, don't I? That's YouTube. Chat. No, I don't know where it is anymore. I don't know where it is anymore. So I'll just bring it up again so you can see it. Facebook.com/ there we go. So it'll be here. And what I'll do is, what time is the thing? It's at 2, isn't it? Forex.Today. Calendar. Just double checking the time. 2:30 for the press conference, 2 for the meeting. So what we can do is I'll start at 1:30. I'll give you an overview of the Fed and the FOMC meeting and monetary policy. Then we'll get the interest rate decision provided by tradethenews.com, and we'll see what is there. And then we will watch the press conference together, and we'll just hang out and smoke cigars or something. Just on Facebook today. Just on Facebook today, just as a test. I just want to see what it's like. So if you don't have Facebook, I don't have Facebook either. So we'll see. And if you do have Facebook, then it's not a problem. If you don't, we'll find out, right? So anyways, thank you for being on my team. Thank you for the professionalism that you show me every single day. I appreciate you and the effort towards success that you do. So, peace on earth. May the pips be with you. May your profits be above average. I'll see you later.